You could share a bit on the call. How was your Friday in terms of trading and how you're able to benefit from what is available with us?
All right. Basically, I've had a kind of rocky start. And what I did on Friday, I decided to use all the information that is available, which is the harmonic trader screen, tie it in with the swipe trade information and the information that we get on the chats.
On the
And
Telegram.
I then
Right.
decided, okay, I was gonna go into gold. I then checked the news. In the harmonic scanner, I did the search for 1 minute, 4 minute, 1 hour, 4 hour a day to look at the trends and different things to see which kind of directions they were going to be going in next. Well, I decided it was going to be a good opportunity to sell, and then I took that opportunity. I followed it all up. I moved my stop loss up so that it was in profit all the time, and even if it would have gone back down or still covered my profit, I closed off the deal at about $40 profit, and then I went back and checked the scanner to see which direction it's gonna go again, and then I took a next trade. I took about 4 opportunities, and I believe I got 3 out of the, and I netted $90 for the day. So I think I had a good day.
Right.
And I plan to change my mode of operandi for booking to follow all the information, and then before I jump in again.
Yes. Excellent. And if you could share with the people on the call, how long have you been doing? How long have you been with us at iMarkets Live? And how long have you ever traded before?
Well, I've been with iMarkets now for about 3 weeks. I got onto the harmonic scanner only about 2 weeks with actual trading. But basically, it's a trial account, not real money. I've started off with $1,000, down to $600 in the account, and then I went back up now to $700. I've never done actual currency trading on the international market. I mean, I was doing trading in Trinidad, but I was selling US dollars to a bank. So it's different.
And in terms of two things
Myself,
that
basically.
we want to touch on, in terms of your goal with regards to your demo account, because right now you're practicing and learning, you're making all the mistakes that you need to make before you go live. What is the goal that we recommend before you go live in the trade?
Well, I give myself until the end of August before I do an assessment on myself and see if provided I have over $1,000 in the account to prove myself that I complete the steps of what they're recommending for us properly. And once I'm comfortable with that, I'll go live in September. Latest I'll be wanting to go live will be 15th of September.
Right. So, and also remember, the goal is to at least double your account, right? So that going through what you're going through right now, you know, the only way you could really double your account is when you apply consistently what it is you're learning, so that you could actually reach at that level. You mentioned how you started with 1,000 and you went down to 6 and you went back up. What will you attribute to it to go down more than as much as it did? And then what will you attribute to it going back up?
What I would say is not following me all the information basically based on my information, but I realize I need to put that information together with the other information that I have available now, and be consistent in what I'm doing. I have to make a decision if I want to make $50 or $40 maximum on each trade, and when I get to that, close it off and keep adjusting my stop loss, going up, moving it up or down, depending on whether I buy or sell. And but it means I have to be following it more closely than I was following it before, because basically I just put it straight through and leave it like that. I took whatever information I got from the
Right. And
charts,
what will you
and I
attribute
book the trade.
to?
I need to refine my position before I take the position
Right.
and then stick to it.
And what will you attribute to your losses exceeding your profits? What does it mean flow in your trading that cause your losses to exceed profits?
Well, I don't have, I never had, like, I didn't set myself a daily profit. How much make for this day? I just wanted to see what I could do basically. But basically what I've done now is I want to pay $100 or $150 a day before I stop trading.
Mm. But I think if I could recall also, one of the things that you mentioned that we identified as something to correct going forward is the fact that on some of the trades you didn't put the stop loss, and those trades that you lost, it may
Yes,
of course you to lose significantly. Correct?
that's correct. What I did,
Right.
I couldn't determine whether the stop loss that would be a buy or a sell, so I left it blank. Basically, I didn't put in any stop loss, and I just put what target I wanted to get. And
Right.
instead, I would I had to close the trade with a bigger loss than I would have put if I had a stop loss.
Right. Good.
So,
So what we touched on in this particular segment here with Alex. Thanks, Alex, very much for your sharing on how the experience has been thus far. I know the key thing with Alex is that once you identify where you need to exactly where you need to fix, especially when you're learning, that is key, right? People have different experiences in learning when they start, and one of the biggest parts that we work on and people make mistakes, there's human tendency, is the actual risk management. And risk management is just simply about you applying the principle of good money management, where for every trade that you take, there are certain rules that you apply. And one of the rules that is key is that we always trade with what we call a stop loss. Basically, the stop loss allows us to ask the question: how much will this trade cost me if I were to lose the trade, right? And no matter what strategy you're using or what tool you're using in trading, and we have many with iMarkets Live, what we say is that if it is you don't put a stop loss, basically you are saying that I'm willing to risk my entire account with this single trade. Because if it is you don't put a stop loss, and let us say, for example, you lost connection with your trading account and you can't manually close off the trade, that trade could continue going in a negative direction, opposite to the direction that you suggested or you traded, that you ordered, and your entire account could blow, right? So even though one of the things that we need to do is check the number of wins compared to the number of losses, Alex, and to see if your win-loss ratio is more than 50%. Because once that is the case, most of the trades that we have on the harmonic scanner, the swipe trades and trades that I post out in our Telegram group, most of those, if not all, are at least 2-to-1 ratios in terms of risk reward ratio. And once you have a win-loss ratio of 50% and you use stop losses at all times, you will be in profits because the risk reward ratio is greater than 2-to-1, which means that if you lost 50%, right, and you won 50%, because your risk reward ratio is greater than 2-to-1, you will basically be in profits because whatever you won was at least 2 times more than what you lost. All right. So it's very important that we apply proper risk management. So I will just go through some of the trades that went on this week to see how we performed, and basically the main strategies that we implemented were core confirmations and what I call pattern trading, right? Pattern trading is just simply identifying patterns within the markets, different patterns that we learned through our education in Markets Live, and then simply applying it in our trading. So this is the Pips group. This is the Telegram group that we have. We have a Telegram group that we have alongside with all the other products that we have in the company. And one of the things I like about Alex's experience on Friday was the fact that he used a combination of the services to come up with a good day in trading. Because we call this, our team specifically calls this the Shark Tank strategy, right? The Shark Tank strategy is simply where we take different tools and services that's available to us, and we put the information together to come up with a decision on whether we should take this trade or not. So we have, for example, like the harmonic scanner, the swipe trades, and then we also have different educators on the IML TV session. You can use the news as well because we do different types of analysis. We do technical analysis, we do fundamental analysis, which is the news. Technical is more structural, looking at patterns and looking at the charts, right? And we put this together to come up with a decision, and then we ask how much will it cost us, right? So we call this a Shark Tank strategy because we liken it to the Shark Tank program where you have different investors and you come up with an opportunity, and then they come up with their views on the opportunity, and then they tell you, well, how much they are willing to invest, which will tell you if it's a good investment or not, right? If it's a good opportunity or not. So the whole bottom line of using the strategy is to really get a stronger confirmation as to whether we should take this trade or not, right? And what I like about it as well is the fact that we don't rush into trades, right? We apply the strategy and we simply determine whether or not we are we be patient, because the thing about it is that we have a saying that the market takes from the impatient and gives to the patient, right? So you want to be patient with your trading, and applying the strategy gives you enough time to react properly without being rash. You know, gives you enough time to do your analysis to then take the trade, because no matter what, remember the market is always there for you to react to it. So if you miss, like let me say you're looking at this trade here, and you were at this point, at the 4th point of this 5-point Elliott wave. This is a pattern called the Elliott wave. Basically, the market moves in waves, right? And it typically moves in waves of 5 waves, right? A series of impulsive and corrective waves, right? So if the market trend is going down, then the impulsive waves are the waves going along that direction, and the corrective waves are the waves going in the opposite direction, right? So if the trend is bearish, meaning going down, and you have this Elliott wave, we have impulsive waves going down and then corrective waves going back up. So the Elliott wave pattern is a series of impulsive and corrective waves, and it normally comes in a group of 5. So let us say you are at the 4th point and you did identify this as an Elliott wave forming. Let us say you were not in a condition to really take this trade. But that's okay, because with the Elliott wave, typically there's a corrective wave that comes after the Elliott wave is completed. So you could say, all right, I will let this run while I do an analysis to then determine if I should take the corrective move, right? So there's always opportunity to actually take to make money in the market. All right, let me share with you 1 second. Let me see quickly. If I could share something with you. So I want to see if I can pull up quickly. So I have a profile on Instagram. It's called Human Scanner, right? I just created it just recently, and I have begun to start sharing some of the results from our analysis, right? So this is an example of um, the opportunity I'm showing you here. So this was the Elliott wave uh, move, and this is where we were in the market here, right? This is where we were in the market, and then this was the result. So I want to pull up the pictures side by side. So look at what happened. We had basically almost exact. The market went slightly lower here, a slight drawdown lower here, and then it went up, and then it went further up since this trade here, right? And so what I'm sharing here is that even if you miss an opportunity when it comes to pattern trading, understanding different patterns, and then looking at where you could jump in. If you miss out on certain parts of this trade, you could have still jumped in at an appropriate point and still make money, whether it's when it came back down here and then you did the buy here at the B point, or when it went up to the A point and then it started to sell. Typically, when the trade is going in a certain direction, we try to wait until the corrective wave is complete before we buy on the impulsive wave, and vice versa. If it is in a sell, if it's going down, we try to wait until the corrective wave is complete to then sell. You can make money on either wave, but we like to say the trend is your friend, and definitely because of that, we try to get the most of the move in the market after the trend is completed. So after the corrective wave is completed, right? So I'm just going through a couple of results this week, right? This was the Euro USD at one point. We did say that based on this pattern, this is the teacup pattern, right? And basically what we're looking at here is that when this trade, when it is fully realized, it goes in the, like in a reflection of the size of the teacup, right? So what I'm showing here is the value of pattern trading is such that it's like you are the weatherman. You are looking on and you are seeing an impending move, right? You still have to react to the market, but at least you're preparing yourself and you're aware that it's possible that this is what could happen. And so you were trading this teacup and you had the handle of the teacup completed, right?
That means they might want to sacrifice
there
his
was
son,
a
you know.
buy opportunity here.
So,
And exactly that is what happened, right? Further to that, if I could pull up,
I mean, if you see size that Alessandro them back 175.
I think I'm hearing questions. So I'm going to meet you, right? If I could pull up Euro USD, right? Look at this guy. Let me see if I can pull up. Right? Now, what I observed with the teacup pattern is that you could extend it, right? You could extend it. So if we go back to the telegram here, the price at this point was 1.14467, right? So if we go in our chart, 1.4467 is just a little higher. Let's go back again. Right? So it was this move here. Right? So this was the initial teacup handle. Right? So the teacup started. Let me see if I can draw it over here. And so I had to draw it over with this telegram, this trading view. Right? Right? So this was basically the initial teacup. And what this pattern telling us is that once you see this pattern, you are then you see then an opportunity to buy. And this is how you trade it. So let us say you were at this point, you didn't know all of this was going to happen, right? Let me see. Hold on, man. Why am I so black? I'm gonna block off all of that, right? So let us say this was the situation. Right, so that was the situation, right? So how you trade this, you see the situation where it's shaped like a teacup. It's a pullback taking place, but the pullback is not complete, right? Now, I did some previous analysis, and I was looking at this pullback. This was actually a pullback that was supposed to come up at a certain point, but I wanted to know exactly how far the pullback was going to go. So when I identified this pattern, I said, all right, how I will trade it. This is how you trade. So you measure the size of the teacup, right? And then you then do a reflection, right? It's a reflection of the size of the cup. 141, I think. 141. 141. 141. Right. That's about there, right? And then I'll put a line. Right? And look at what happened. Look at what happened. Right? The price went up here, and then it started to fluctuate here. So in this region here, it reached this line. So it did realize the trade, and then it reached up to this limit here, right? And it was facing some resistance at this point. It was facing some resistance at this point. So look at what happened. So what you do in a situation like this, one thing you could do is you could determine, well, all right, it's facing this resistance, but the first thing I do, hold on. By the way, guys, for those of you who on the call, this week was a significant week for, everyone. I just want to continue to just encourage you all, just to give God thanks, right? To give God thanks and continue to keep your family in prayer, continue to keep yourself in prayer. I encourage everyone, because, this week was a significant week for us, right?
Hello?
So coming back to this, so one of the things I realized that is important to do is to determine if you could resize the cup, right? Now I haven't studied this pattern extensively, but I feel that there's an opportunity to resize the cup. So look at it. So this line here, and let me just move this here. Look at this. Right? So I'm looking at this here, in fact, a little higher here, right? And as far as I'm concerned, we still have a situation where we have a cup on our hand, right? Sorry, this is wrong. Okay, so no, let me delete this, right? Right. So we have a new teacup on our hand, right? And now we have a new trade opportunity, which is the same way I did it before, and we saw that it actually realized. It's the same way. It's the same way now you could measure this cup. It is 310 pips. And then you can measure 310 pips in a reflection here. Right? And then 10 pips here. So now we have a new target based on this previous pattern, right? So this is the situation we're looking at with Euro USD at this point, right? Now, if we go further, we could do further analysis and look at if this is a good support here, right? This was if you use the Fibonacci, this here was a move, right? If you use it from here, right? This is supporting at the 38.2 level, right? Let me just mute whoever is. Now, when you understand Fibonacci, right? Fibonacci is basically a tool to measure the percentage of the previous move, right? And if the percentage is a small percentage of, remember the market goes in waves, not in a straight line. So the market, to identify if the market is turning, right, the percentage has to be a certain amount. If the percentage is more than 61.8, which is like the golden ratio in Fibonacci in trading, basically it's suggesting that the market is about to reverse. But if it has touched the 618 or anywhere above that, it's suggesting that the market is still in the current still in the current move up, right? So let me just show you. So the move is going up right now, it's bullish. So on this Fibonacci, it's 38.2, which is suggesting that it's still bullish, which means that if it's still bullish, then once the market finds a price higher than this previous high, that's a confirmation that it's bullish, right? Now, right now, the market is doing this. The market is touching this level, the previous high, but it exceeded it. And if you were to zoom in, right? If we were to zoom in and we were to use pattern theory, right? We will see that this here is what we call a bullish pendant pattern.